I know some of you are probably wondering why my technical analysis is not coming in as often or as frequent as it used to be. And I just want to shed some light on that, just that I've been quite very busy with a lot of other things that I am trying to get them in place. But I want to take this moment and throw one technical analysis out there. And primarily this evening or today, we will be discussing on SPY, or we'll be just primarily focusing on SPY. A few days ago, I threw out an analysis which was pretty much telling us what this past few 2 days looked like, and we kind of spotted this few days quite ahead of time, the reversal point. And I'm just gonna go ahead and shed some light on that, and point out what we might be expecting moving forward from here, or from where we are today. Okay, and without wasting any further or any much of your time, any more of your time, let me go ahead and switch back my chart from 5 minutes here to 7 minute chart, which is my favorite for the most part. Um, Not always for the most part. I like 15 minutes better, which actually I should maybe just use 15 minutes right there. Here we go. Um, if you're looking here, you do see those orange spot. This is just today's trade. Today's trade has been amazing for a lot of you who took the trade. The day opened, we had a clear breakdown to the breakout to the downside, which is a pretty bearish. Um, and we also had that. Actually, if you are looking at a 7 minute chart, the 7 minute chart should tell you exactly what happened in the morning. We see that the day opened on a very strong bearish momentum, because the first candle had no wick at all from the top, and the second candle broke right away out of the opening range breakout. That gives us a very perfect entry, and we rode that to the downtrend until we saw this doji candle, and then we exit that put position. And those of you who took the calls, rode that call from 540 to all the way to 555. That is a massive move. You will never see that around anywhere, really easily. So if you took the trade, good job. And if you did not take the trade, don't worry. There are more opportunities that we will collide with in the next few. The month is coming to the you know midway. There are multiple opportunities that will come, and a lot of them will involve or revolve around the news that comes from election. And just based on the trading strategy that we normally use, we want to use that news as our catalyst. And meaning it doesn't really matter to us. We don't have to rely on that. But technically, what we need to focus on is which direction or which way the opening range breakout is leading us to. And then we just have our trailing. We will have our trailing moving average as our guide. And as long as you're on one side of the trailing moving average, you are good. And as long as you are in one direction, you are good. Okay, and then you just use the other factors or external factors as your catalyst. Anyhow, without wasting time, let's jump right into the technical analysis. I'm going to transform this back into a 15-minute chart, and then I will go ahead as well at the same time and turn off my extended hours, so that we can only focus on the current data, which is in the time frame that matters. That is the trading session. Okay. Now that we have that taken care of, we I will warn you though that my chart is a little biased, because I'm using Heiken-Ashi candle chart pattern, which is what I highly recommend if you haven't used it. For the reason being, Heiken-Ashi really make things so easy for you to handle. First of all, it relieves your stress. Secondly, makes you identify reversal point or true reversal points easily, because you are only focusing on the doji candles. Where you see a doji, expect a reversal. Like for example here, where you see a doji, expect a reversal. That's one example, and that's one advantage of using the Heiken-Ashi. Okay, so I will be using the Heiken-Ashi, but for some reason, if we have to visualize the data in a more different way, I will transform things around into a regular candle pattern or traditional candles, so that we can look at those data in a more, you know, unbiased way. Okay, on my chart here, I have two regions which are still drawn here. This regions just indicates the major support and resistance level. If you have seen the top, let me paint the top as the red line with the red line here. Then we'll continue with the discussion. We'll just make it. Let's make it. Let's call it that. And then let's paint this lower one, not orange but green instead, to indicate level of support at the moment, whereas the top will be our resistance level. Okay, our it will be our current resistance level. So by just looking at the 15-minute chart, the 15-minute chart is really telling us a lot. What we are expecting tomorrow is this. If I actually zoom this a little bit clear, you are looking at the 553 level. On that 553, if we look at the left hand side further, you will see that the region that correspond to September 24th, I mean, no, no, September 4th, sorry, the region that correspond to September 4th was actually a resistance level to the bear. Okay, and it was a support level to the bear, was a support level to the bear. Because it was a support level to the bear, that is going to act as our um, current resistance level. So the catch here is that if tomorrow we open, and if we open above this yellow or orange line which I've just drawn right now, expect your takeout profit to be in the red, because we are going to retest. That means we will just be retesting that higher high of the what date was that? Around August 26th. So yeah, if we break or open above that, you expect a bounce off from that, which means if we gap up for some reason, expect a bounce off from that. Do not expect any further than that. Expect a bounce off from that red zone there, which is of course our resistance level. And the other way around, if we open below this orange line, which I've just drawn right here, be sure to note that you take profit if you're trading puts on that case, or in that occasion. If you're trading puts, you take profit, expect you take profit to be in this green zone, which is our support, I mean current support level at the moment as I talk, meaning that um, we will be testing these two levels, which actually, let me put a bubble on that so you can see clearly. And by those two levels, I'm referring to these two bubbles which I've just drawn. Okay, so we will be coming back to retest this level. If we open, if price opens right below that, below the orange support, I mean the zone that I've just drawn here. And the way I've drawn my zone, a lot of you might be asking questions: how do I draw my zone? Do I just pick a random point? No, I do not pick a random point, because these are clearly actually seen in the chart. If you take a look to the farther to the left, the highest or the tallest wick in within this zone was a candle which was formed on September 4th at 800. um, so we use that candle for drawing this level. Okay, which means you want to cover the tallest wick of that candle to the body of the candle itself. Okay, all right, with all that aside, we have identified what we should expect tomorrow. If we open above this line here, you can put your chart in Heikin-Ashi, change your time frame to 15 minutes, draw this line on your chart. This will be the exact same thing. um, if I haven't, or if you haven't heard me talk about this yet, I always, or you might be asking questions. Why do I have this blue staircase here, which I'm not talking about? I've spoken about this multiple times. I've preached about it every now and then. This is what I call the opening range breakout. The opening range breakout is primarily just a set of hops. I would say if hops was visible, this would be the hop, in such a way that if price opens on either side, you are certainly believing or hoping that it will continue on that side, depending on the momentum of the candles itself, or depending on what in each and every other individual candle, what they say. Okay, depending on what the candle is communicating to you, this staircase will help you stay in the trade and make profound decision on which direction you should trade to. For example, if we use this day, this really red day here, you see that and I will warn you though, once again, for every doji candles that forms, do not buy or do not sell or do not take any action, but rather observe. I give you that. I tell you that because that. Let me actually tell you once again after drawing this zone here, this bubble here, this ellipse. All right, in this ellipse that I've just drawn, those are 2 or 3 consecutive dojis. Okay, those dojis indicates uh, a consolidation, or it's a chop. It's not clear which direction it's going to go. But as soon as we see whichever direction has a flat candle on one end, the side that takes the wick is the direction that will follow. In this case, the top of the next candle outside this cycle that I just drew broke to the downside. The top had no wick. That is a clear, perfect, strong, strong bearish momentum. And that is on the other side of the opening range breakout. Okay. In addition to that, I have this red cloud here. This is just my moving average for trailing stop loss. Normally, how this works is that uh, when you break to the side that you're expecting the price to go to, you will stay on the trade as long as the top wick of the candle does not go as high as possible to touch this cloud. This is a no go zone. So as soon as it touches it, you exit the trade and you call it good. Okay. All right. Anyways, that is what that stare is, and that's what I use it for. With that in mind, let's take a look at a longer time frame and see what we can expect. Actually, before I go that further, let's take a look at the 4 hours chart. In a 4 hours chart, or according to the 4 hours chart, you see that actually now this is kind of bringing this is getting interesting. You see that this was my prediction a few days ago. Okay, and this prediction kind of it's just all coming together. If you see this blue line here, this blue line, I drew it a little while back, and I think, or I believe, the video that I made on this video was that price will come to this zone. When price hits this zone, we will see a retracement or a pullback to the previous higher high. Okay, which is what is happening at the moment. We are starting to trace that previous higher high according to our entries or entry according to our entry criteria. We are at a right spot for call options because we had our doji right here. If you cannot see it clearly, there's a doji right there, which is a clear reversal point on a 4 hours candle right there. And the next candle that follows green without a wick at the bottom. That means there's a powerful bull momentum. Okay, and as you can see, the whole moving average below that is starting to turn or form green, meaning that we are starting to get bullish a little bit to go and retest that red zone up there, which is our current resistance level. Okay, so with all that in mind, let's move ahead to 8 hour chart, which of course the 8 hour chart is primarily or pretty close to a daily chart, simply because on a single day we have 8 hours. Well, a little bit less, but it's pretty much the same as a daily chart. There's no big difference if you put these two together. And as I click on the other one, or this or the other, the only difference you're seeing here is the moving, the moving average shifting its position. But other than that, everything is the same. However, on a daily chart, you do see that what appears to be our entry is not yet our entry. Okay. However, there's a clear signal that we are at a reversal point at this moment, meaning that we expect tomorrow. Actually, we expect price to open in the middle here and go hug that zone which we pointed out. So if price is going to open in the middle, which means we should open around 549. Actually, not 549. 548. We should open at 548. Let me make that bet. Where? Right there. 548.53. We should open around 548.53. If we open around 548.53, the odds are very, well, very 50-50. The probability is very halfway, meaning that we could break and go test that zone, which was the previous day high, which means our previous day high would be actually right here. So you tell me, we will have a potential, we have a chance to rally from 548 to 555, but that might not be the case though. This is only if we open around 555, I mean 548. But also there's, at the same time, there is a 50% chance that we could drop down to a 540 level here, which means that's a eight to $10 drop, which is approximately, if somebody bought, I don't know how many shares, because this is SPY. You know how volatility works here. That will be a very significant gain. But if we turn or change things around and look at things at a regular candle uh, perspective or point of view, you do see that this candle right here is actually a hammer. It's a hammer, and this hammer pretty much has, it's telling us a lot of stories. The previous candle before the hammer was a doji, and that doji is also telling us a lot of stories. So we have a lot of things on our table, or we have a lot of data on our table to work with. But also at the same time, you see that this hammer is within um, the hull moving average, which the hull moving average itself is starting to turn green, indicating to us that at least is hopes that we might be or we will be bullish. Okay, so with that in mind, tomorrow and Friday, there is a high chance that we will be green or the market will stay green, and partially probably on Friday, I mean on Monday as well, because I would assume or would expect that by that time we are already at 564 level. Okay, because 564 is what we are targeting. But if you're setting your take profit zone, just set it at 562, 563 there, so that you're not being so greedy and losing when you're not supposed to, and you can just trail things with the stop loss afterwards. But my take on tomorrow and the next few days would be that we will have some bullish opportunities here. And if I narrow this down a little bit, probably I have to just remove those lines. All right, I've just removed this line. I drew this line here, this trend line. It's not a perfect trend line. Why? For a number of reasons. It's pretty biased. But for the data that I wanted to visualize, it worked quite perfect for me. So this is not the best way for you to draw your trend line, because you would start at this lower here, lower that, lower that, lower that. But that does not really matters a lot, because if you put this here, this is quite not bad. But we miss a lot of information in the process, because you see how that goes. But according to the way things are going, this should work perfectly fine, because um, when we draw it that way, this way, we do have a liquidity run here. We do have a liquidity run right here. This extension here. This is a liquidity run, which is where institution manipulate manipulate the market, making people think that it's gonna go bullish. I mean, it's gonna go bearish, and a lot of people put their shots, and then things reverse, and they got kicked out. So anyhow, that is having, I mean, having the trend line and having the zone in place plays a lot of keys here, or plays a lot of roles. So I do like to use support and resistance. So um and if you're not sure on how you can draw supports and resistance, I will have another video on that, on how you can draw supports and resistance um in a very like without no time. So this is pretty much our current support level. The green one here, the red one at the top there is our current resistance level. But if we do break um, below this green, we are expecting to be stopped right around this orange here. And just keep that in mind. Do your research. Do not take my advice for what your decision might have been. But if you find it helps you, yeah, stick around and get more knowledge. All these resources are free out there. Have a good time. Bye.